Mortgage insurance pays off a mortgage debt in the event the borrower passes away while the principal loan is still outstanding. However, a better alternative is mortgage protection. Through a term life insurance policy, it can offer more flexible protection than mortgage insurance and cost considerably less. Before you make any decisions about how to protect your home, listen to our insurance expert, Carly Griffin, explain the differences between mortgage insurance from your lender and a term life insurance policy you can purchase yourself.
Well, that's a pretty good segue into what we can talk about next. I know from working on the marketing and the search side that a lot of the queries that we get that lead people to the website are about mortgage insurance, and specifically like, why is it so expensive? Do I need it? Things like this. Of course, there's many different products that get labeled as mortgage insurance, but maybe you could break down for me the same way you break down for someone how mortgage insurance works and the different ways that you can protect your mortgage.
Yeah, absolutely. So mortgage insurance that's from your lender is going to be directly tied to your bank. So the lender is going to be your beneficiary, and your balance of your mortgage is your coverage. So ultimately, not the best solution for everybody, because at the end of the day, every time you make a payment onto that mortgage, your balance of coverage declines. So every 2 weeks, every month that you make a payment, you're going to see over time that balance is actually declining. As well as typically every time your your mortgage renews, you're actually going to see that premium also renew. So you're going to see that coverage go down in balance, but your premiums are going to end up costing you more every 4, 5, 6 years, however often you renew your mortgage. So when we look at an alternative as protection for that, we would look at a term life insurance policy that we can lock in that coverage. So you're not going to have any declines in balance, that coverage remains in force, and long-term, your premiums remain level as well. So you're not going to have any changes there. And the other big thing is that your family then becomes the beneficiary. You're not going to have the lender involved at all. It gives your family a lot more flexibility. So if they want to pay the mortgage off lump sum, they have the ability to do so. Or if they just want to put it into their savings and make sure that they have the amount necessary every payment to maintain those payments, then they have the opportunity to do that as well. So it just gives a lot more freedom and flexibility to yourself, your family, and a lot better protection long term. The other big thing is that most lenders with that mortgage insurance do what's called post-claim underwriting. So they may ask you a few questions up front, but they don't really do a deep dive into your health history until a claim is being made. So the likelihood of that potentially being declined is higher, even though you've been paying for X amount of years. Whereas with term life insurance, all of our carriers, we do upfront underwriting. So we make sure before you're making any payments that you're actually covered with this insurance. You're not just kind of paying and hoping that it's going to come through. It's guaranteed that it will be there as long as you've been approved and you're maintaining your payments.
Cool. And so I know I have a mortgage myself, and I know it's not like a one size fits all for how long your mortgage is. Some people have really long mortgages to cover it, or maybe they've had the mortgage for a while and they're just getting covered. Is it easy to get the length or the time, that term, to match up with what your mortgage is?
Yeah, absolutely. So we have a variety of terms, and some of our carriers also do custom terms. So let's say you have 28 years left on your mortgage. A lot of carriers typically have them in kind of ranges of 5, so 25 years or 30 year. We actually have a few carriers that actually offer those custom terms. So if you're wanting to make sure that there's no more length of time than just that term, we definitely have options for that. But also it gives you flexibility if you do want that extra few years, you can lock in that coverage. And of course, you can use it for multiple things. So if you say have a 20-year-old mortgage or 20-year mortgage outstanding, but you have baby on the way that you want to make sure has that protection in force until they're at least 30, you don't have to use it just for one purpose. If you want to lock in that coverage long term, you have the ability to do so, because again, it's not directly tied to that mortgage. It gives you a lot more flexibility with your protection.
And then what about say, not a lot of people stay in the same house forever. You know, there's starter homes and they upgrade and things like that.
Yep.
Is it easy enough to, like, say, get another term life insurance plan that would cover a new home? Or is that something that you look at from the very get-go when you're starting this coverage?
Yeah, of course. So when it comes to getting new coverage or extending out coverage, typically what you would end up having to do is kind of reevaluate. So how many years do we need this coverage for? How many years of protection do we currently have? And does it maybe make sense to get a secondary top-up policy? Or does it make more sense to kind of restart our coverage if it's just for that purpose? Really comes down to each individual need. So if it's a newer policy that premiums haven't changed too much in those couple of years, it may make more sense just to kind of start fresh, go through that underwriting process again. If, of course, everything in your health has remained the same and nothing has really caused any negative impacts on your health there, more than likely you're going to be able to get that coverage. But say it's been 15 years since you've had that policy and you still have 15 years left on that policy, say it was a 30-year to begin with, and you're starting out a new 30-year mortgage, it may make more sense to leave the bulk of that coverage in force for what you already have and maybe get a top-up policy so that you're not going through the underwriting process for all of your coverage and paying higher premiums based off of your age today compared to maybe 15 years ago, for example.
So Carly, would you say that people like typically spend more or less money if they choose a term life insurance policy to protect their mortgage rather than mortgage insurance from their bank?
So typically, yes, you're definitely going to see some savings, especially long term. So like I was mentioning earlier, with mortgage insurance, that renews every time your mortgage renews. So it gets more and more expensive every 4, 5, 6 years, however frequently you're renewing that mortgage. So long term, you're definitely going to see those savings because your premiums with term life insurance are guaranteed based off of your age at time of application, and they don't renew again until the initial term is over. So you're definitely saving long term. And typically, you're also probably going to see savings up front as well. We do tend to see a lot of people having higher premiums from the beginning. But again, mostly long term, you're definitely going to see those savings because if we're saving from the get-go, it's just going to get more and more expensive for that term life for the mortgage insurance, and that term life insurance is going to remain level for that whole time.
Okay, so I mean, mortgage insurance, from what you say to me, doesn't sound that great. But are there any instances where someone might still choose mortgage insurance over a term life insurance policy?
So there could be certain circumstances where you're required to maintain that insurance just based off of maybe the percentage you've put down on your mortgage, or if there's certain kind of criteria that you're needing to meet. But really, most of the time, you're going to be better off getting a different form of protection because, again, even if there was, say, something in your health that wasn't going to allow you to get traditional insurance, we do have other kind of options there with simplified insurance where okay, if we're having issues getting this coverage in force, most likely if they do post-claim underwriting, they're going to find a reason to deny that claim as well. So most of the time, it's very, very beneficial to proceed to a term life insurance policy than maintaining that other policy if you do have the opportunity to switch.